All right, good morning, everyone. Thank you so much for being here. I am Valerie Pereira, VP of Market Research at AEROASSET, and thank you very much for being here. In addition to trading helicopters, AEROASSET reports what it sees in the pre-owned twin-engine helicopter markets. We call this report the Heli Market Trends, released since 2019. Heli Market Trends provides a very refined and digestible view of the retail pre-owned market in 10 minutes or less. So let's jump right into it. This is the Heli Market Trends 2022 Annual Roundup. Before we start, for those who are unfamiliar with this report, it covers models in production and variants with recent pre-owned sales activity. It follows a few strict definitions. For example, the definition of a retail sale, which is an on or off market pre-owned sale to an end user or operator. For further definitions, you can download the report from aeroasset.com/report. So here's a recap of the pre-owned twin-engine helicopter markets in 2022. Top half, you'll find sales, absorption rate, supply for sale, and deal pipeline data for 2022, as well as the year-over-year trend. Transaction volume was stable, although slightly lower 2022 versus 2021. Pre-owned twin supply for sale has been decreasing since end of 2020 through 2021. In mid-2022, however, the supply trend reversed and started to increase. This being said, at the end of 2022, supply was still 1/3 lower than COVID peak in August of 2020 and 50% lower than the 5-year peak. The deal pipeline, which accounts for the number of sales pending at various stages of the transactions, stand at 23 units at the end of Q4 2022. This is a noticeable 35% increase from Q4 2021. Overall absorption rate is stable at 1 year. This means at the end of Q4 2022, there was 1 year of supply at 2022 trade levels. Now take a look at how the pre-owned markets performed over the last years in terms of retail sales, supply, and absorption rate. You can see the trend starting in 2017 until the end of 2022, with supply declining yearly except during early COVID, the COVID bump. Retail sales proved resilient through COVID, increasing slightly from 2019 through 2020, and more sharply on the back end of COVID through 2021. Also interesting to note the overall decrease of absorption rate on the right-hand sideline graph. The positive absorption rate correction pre-COVID of heavy twins, the decrease in absorption rate from 2020 onward in the light and medium twin engine markets. There's a lot of data on this slide. I will comment on part of it, but please feel free to download the report if you wish to explore it in more detail. Retail sales is in units sold and value, absorption rate is in years, and supply in units for sale and value. And at the top columns, you have light, medium, heavy twins, as well as the overall totals. To the right of that, you have a graph representing same data in semester layout in 2022. So light twin engine retail sales volume dipped to nearly 10% year over year. Medium retail sales were stable. Heavy retail sales were up 11%, the biggest change year over year. Also represented is the strong increase in average transaction value on the right-hand side. Now we look at where the buyers are in 2022 and how sales fared in terms of configuration and what was the year-over-year trend and what it looked like. North American sales dominated the pack last year. In 2021, North American European transaction volume was almost on par. Not the same story in 2022. North America transaction volume increased to 47% of the total in 2022, and Europe decreased to 25% of the total. Sales of both VIP and utility configured helicopters declined slightly year over year, while EMS configured helicopter sales increased over the same time period. Excuse me. In monitoring all the pre-owned helicopter data accumulated over the last year, some interesting trends appear, and we wanted to highlight one in particular. Normally, the top end of the markets is the most liquid segment. we notice sales activity of 20-year-old plus aircraft experiences strong resurgence year over year. This is presumably led by the impact of price inflation of the new aircraft and OEM lead times on the top end of the market. In any event, it's clear buyers have taken a liking at the price-value proposition of 20-plus-year-old airframes. It will be very interesting to see how this trends in the next 12 months. In the meantime, let's review which markets performed well and which less so last year. Every quarter, we rank pre-owned markets from the most to least active. The algorithm that powers the ranking is weighed by model market, absorption rate, retail sales, in this case, 2022 unit sales and active fleet sizes. The most liquid pre-owned market in 2022 were the EC H135, followed by the EC H145, and the Sikorsky 76C+++. The least liquid markets in the lineup were the Sikorsky S76D and the Leonardo AW169 with 0 pre-owned transactions last year. The biggest drop in the lineup was the Bell 429 from 2nd place in 2021 to 10th place in 2022. Interestingly, the average transaction price of the Bell 429, which you can see on the right-hand side, is almost $1 million higher than last year. Fewer Bell 429 transactions year over year, most of which were at the top end of the market, and increased the average pricing of the Bell 429 market upward. Predictions for 2023. Based on the current OEM lead times and the pricing trend, our belief is pre-owned twin-engine helicopter market absorption rates will remain stable for the next 12 months. Pricing will soften in the markets with no pre-owned activity last year, such as the Leonardo AW169 and the S76D, and will remain stable in other market segments. And with that, I'm delighted to hear your comments and answer any questions that you may have.
Valerie, given the ever-lengthening lead times on new builds, do you anticipate the top performers from this examination period, I'm thinking 145s and S76C and C+++, do you see that continuing just simply because of essentially market forces? Even at whatever price point, you can't get them for 3 years.
I do believe that.
That Sikorsky is sort of dropping the ball a little bit on the 76D. But where the H145, obviously with a 5-blade variant, that's in production and very desirable. But like you said, lead time's still pretty out, and so driving pre-owned market quite strongly.
This is a continuation.
Coming? Powell walking?
Kumbaya. Yeah, kumbaya. Yeah, exactly. Get those steps in. Just now with Sikorsky, they're not taking any 76C plus orders, and pending any joint venture with any other airframe in another part of the world. Do you imagine that if they don't come to that deal and it effectively goes out of production, I think they have 3 left in production, do you see that S76 type scenario occurring with the Cs? Or will the numbers of the Cs in the market prevent that?
I could get up and go grab it too. Yeah, I mean the Tata licensing deal, will it happen or not? I mean your guess is as good as mine, right? But the D, like when you speak to the operators, it's a formidable aircraft. It's very smooth, and it's a really good, solid platform. As far as I know, there's no Ds in production at all, and there's no more factory. But I may be, don't quote me on that. I may be wrong. And however, I do know for a fact that Sikorsky have announced that they're not renewing TAP programs. So if you're enrolled on a 76D TAP, a total assurance program, like a tip-to-tail maintenance program, when you sell the aircraft, the TAP will not be renewed for the buyer. And as a buyer, if you buy a D, pre-owned D, you're not going to get enrolled on TAP. So no more support. I guess this is a first step and maybe the OEM just altogether stopping support of the D, which is a very different scenario to H145 D3, where clearly the OEM is fully committed to it. It's in production. You can, you can order. You can have a firm timeline. You know exactly what the end price is going to be, et cetera.
All good?
Thanks, Val.
Thank you.
Any more questions?
Thanks for helping me out. My throat is killing me.